Welcome back, the accounting boffins out there. Yes, what are we looking at? We are looking at accounts that are unique to a company. Right, now what is this one? It's called shareholders for dividends. Now definitely, this account is a balance sheet account, and it will either have no balance or a credit balance. It cannot have a debit balance. You will never ever find a shareholders for dividends account with a debit balance. Once again, I'm going to take you back slightly. Remember your SARS income tax? It could have either a debit or a credit balance. Not this one here. Shareholders for dividends either has a null balance or it has a credit balance. Got that? Okay. Now, what happens? During the year, your company directors will pay an interim dividend. Now, what does that mean? That means that sometime during the year, the company directors will declare and pay an interim dividend. Once again, the word interim means during the year. This transaction will take place during the year. What's my double entry? Remember the two accounts involved? An interim dividend was declared and paid, and a check was issued. Immediately it rings a bell. What bell does it ring? The bank account is involved. And the bank account you're au fait with. It's not a new account for you. So therefore, your double entry is what? Debit ordinary share dividends, sometimes called dividends on ordinary shares. Understand? It's an expense, it's a nominal account. Therefore, I'm debiting my expense account and I'm crediting my bank. There's my contra, watch the cash payments journal, and obviously my amount. So guys, an interim dividend that is paid during the year. What's my double entry? Debit ordinary share dividends and a credit to bank. Got that? Brilliant. Now we move on. Let's go back to this account here. Shareholders for dividends. Do you recall you had a balance at the beginning of the year? That one there? Obviously, you need to pay it this year. And when you are paying it, what are your two accounts involved? Your two accounts involved are bank and shareholders for dividends. Once again, a credit to bank. Why? Decreasing in value, and a debit to my shareholders. Why is that? Because my liability is now decreasing. Do not confuse this entry as being part of this year's dividend. Certainly not. It's a dividend that was due last year that is paid this year. Clear? Right. Now what happens? Now we come to the end of the year. And when this happens, we now declare a final dividend. Watch this. The company directors have declared a final dividend. What is clearly evident from this year? No mention is made of the word paid. Nowhere does it say that the dividend was paid. So in other words, my two accounts involved are, let's identify the two accounts. They are ordinary share dividends, and who do I owe the dividend to? Definitely, it's owed to my shareholders for dividends. Clear, guys? So, what am I referring here to? I'm referring to the final dividend that is recommended. Remember, you will have the paid dividend, which was your interim dividend, and your final dividend, which will be your recommended dividend. The entry, once again, a debit to ordinary share dividends. Watch, you immediately involve your expense account. It's a debit to that account. We are debiting it because it's an expense account. What do expenses do? They decrease your owner's equity, therefore expenses are debited. Clear? So there's my entry in my ordinary share dividends account. At the same time, I will credit my shareholders for dividends. Watch this here. there's my entry in my shareholders for dividends. What am I doing? I'm raising my liability. That's the amount that I owe to my shareholders. When? At the end of my financial year. Okay, now the shareholders for dividends, being a balance sheet account, it must be balanced. So you do the normal procedure, and all of you out there, I'm sure you know how to balance an account. Here you can see you ending off with a credit balance. In other words, you are still owing money to your shareholders. When is this one? At the end of my financial year. Remember, this was the dividend. This one here was the one that you had recommended. Keep that in mind. It was a dividend that was recommended at the end of your financial year. Now, looking at your ordinary share dividends account, remember, you already had this entry. This was a dividend that was paid. Now you bring in the dividend that was recommended. There's the entry. And the total amount, guys, is what you write off to your appropriation account. So in other words, your dividend that you have paid, the interim dividend, plus the dividend that you have recommended, those two would constitute your expense. Which expense? Ordinary share dividends, and that's the amount that you will write off to your appropriation account. Okay, so we've done something very interesting now. But guys, we're not there yet. There's one more segment for you to complete the final account. So I'm sure you want to see the final account, don't you? So therefore, you're not going to stray or go away. You're going to stay with Matrix Uploaded.